Hello everybody, Mr. Chia here again. Today we will like talk about fixed asset and depreciation. First, what is fixed asset? Fixed assets are assets owned by the company, used to generate income or revenue in the future. These are normally big dollar item, big amount item. Okay, and you don't normally sell this item on a daily basis. Example of such items are, for example, in a company, you may have a land, you may have a building, you have machineries, you may have cars, you have aircon equipment, big computers, and so forth. These things you use so that they can generate income in the future. But you don't sell your land or your car or your machinery every day. So most likely you'll be using this type of asset at least more than 1 year. So we classify this item as fixed asset. Okay, why? Because it's different from another classification, which is current asset. Current asset is like things that you make, for example, the handphone that you sell. You make a handphone today, you sell tomorrow, you make the next day, you sell the next day, and so forth. Those are called current asset. Fixed asset, you do not sell. Okay, and the important point about fixed asset is normally the amount is huge amount. Okay, now what do you mean by depreciation? Let's say, for example, you buy a machine for 100,000 ringgit, used for 5 years. Okay, 100,000 machine used for 5 years. So we provide in accounting provision for the wear and tear of the equipment or for the obsolescence of the equipment. So if we think the machinery can last for 5 years, 100,000 RM, so every year we provide 20,000, 20,000, 20,000 for 5 years. So 20,000 times 5 years come back to 100,000. We save this money. Why do we need to save the money? Because if we spend 100,000 and it's going to be used for the next 5 years, at the end of 5 years, the machine is no good, you want to get a new machine. Where do you get the money from? You didn't save. So therefore, in accounting, we are quite prudent. Okay, very careful. So we save the money. And that saving of money is called depreciation. So maybe you say your car is 5 years. Maybe your machinery, you say it's 5 years. Maybe your building can last maybe 20 years. So the total cost divided by the years of service will be the depreciation per year. So the depreciation per year divided by 12 will be the depreciation amount per month. Okay? Thank you very much.